Welcome to today's webinar. Excited to see people joining. We have a good amount of people that have RCP to this, so I'm excited for today's chat. We'll give a few minutes for people to start coming in, getting their drinks, getting set up. I have some water here. But as you come in, please stop in the chat so we know you guys are here. Say where you're from today so we can kind of get an idea. It's the morning, afternoon for you guys. I'm in Salt Lake City, so it's a nice fall day here. We're just getting ready for Halloween. Alexis is from Indiana, Houston, Mesa. I have a lot of family in Arizona. That's awesome. Denver, just on the other side of the mountains. Hawaii. Okay, I'm a little jealous of Heather. Oh, wow. A lot of people here from everywhere. I'm excited. All right, we'll continue to give a few more minutes. Louisville. It's so fun to see where everybody's from, especially it's cool to me that we can hold something like this and all of you guys can attend. All right, more people are coming in. I hope you guys are excited to talk about S Corps today, because I know I am. Sacramento. You guys are giving me ideas for trips to come to soon. New Jersey, yeah. All right, I see some questions going in the Q&A, which is great. Make sure you're putting any questions that you have in the Q&A so that we can answer them at the end of this. And then just general information you can put in the chat. All right, we'll give one more minute and then we'll get started on today's topic because we have a lot of important stuff to go through. Excited, yeah. I guess excited about S Corps is not always the word, but it's good knowledge to have so that at tax time, we're not even less excited to pay taxes. A few people from Hawaii, I'm impressed. It's pretty early there for you guys to start your day. All right, we've hit 100, so I'm gonna get started. My name is Haley. I am an onboarding accountant with Collective. I have been with Collective 3 years next month. So in my role as an onboarding accountant, I've helped hundreds of small businesses, likely like you guys, get started with Collective, get their bookkeeping up to date, and get our payroll services and save money as an S Corp. So that's what we're going to be talking about today. At the end, our main topic is how to backdate your S Corp election to save you thousands potentially, but we do have some background foundation knowledge to lay to make sure that we can understand how to save that money. So you'll see here on this first slide, there is a QR code in the bottom. This QR code is going to pop up every few slides. We're going to be talking in a lot of generals today about taxes, about different types of businesses. But one thing I've learned from working with so many different businesses is that every business situation is unique. There is not one or two that are exactly the same. So please always, if you want to talk to one of our new business advisors, click that QR code or scan that QR code so that you can set up some time to meet with one of our new business advisors and talk about your unique business and how Collective can help you. So to set our agenda for today, like I talked about, we're going to lay some foundation so that we can understand S Corps a little bit more. So first, we're going to talk about Collective, who we are, and why you are on this webinar today, and what our values are. And then we'll talk a little bit about the basics of self-employed taxes. And then we'll jump into what an S Corp is and how that's different and how it can save you some money. And then we'll talk about the retroactive S Corp election. And then after that, we'll talk about how Collective helps S Corps, and we'll wrap it up with the Q&A. So make sure you're adding that Q&A, any questions you have into the Q&A right now. I'm going to be checking that at the end. So I won't be looking at it during the call. We'll answer all your Q&A questions at the end. And a little disclaimer. So this webinar is for educational purposes only. Like I said, every business is different, so don't take any of this as legal or tax advice for your business. Always consider consulting a professional if you need legal or tax advice for your business specifically. We just want to be here to educate you and help you make informed decisions. So what is Collective? Collective is the first all-in-one financial platform designed for self-employed people. I've been with Collective for 3 years. I've seen us grow so much in the last 3 years, and it's so cool that now we do have this one platform. You can log in and see all of your business backend in one place. All right, that was a little bit about us, pretty quick. So we're going to talk a little bit more about you now. So let's talk about where your money is when you're self-employed. When you're self-employed and you start a business, you are focusing on making money, servicing your clients, doing what is you are passionate about, and that's why you started your business. But there are a lot of other aspects to running a business that sometimes get forgotten or they seem overwhelming. That could be setting up your business, making sure it's set up in a legal and correct way. Maybe you're wondering about financial reports, or do I owe any estimated taxes? Maybe you're wondering, what is bookkeeping? Do I need to do that? And maybe you're wondering, where do I go when I want financial advice? Or am I in compliance with the IRS? Am I in compliance with the state? At the end of the year, that tax bill comes and you're curious. Maybe it's a big shock to you. Do I run payroll? Should I save for retirement? And when you're thinking of all these things and you need to make a financial decision, it's hard to know which direction to go if these aren't all organized. Your setup, is it in compliance? Now that you need to pay taxes, it's really helpful to have financial reports. And to have financial reports, you need to do your bookkeeping. And all of this can kind of become a messy web and become a little bit overwhelming for a lot of self-employed people that this isn't your focus. Your focus is on doing what you love. That's why you started your business. So at Collective, we want to help you with that and make it easy. That's why you join us, so that you can focus on your passion and we can help you organize all of those things. So Collective will help you be in compliance, and we'll send you reminders saying, hey, this is what you need to do to be compliant with the IRS and the state so that you are never in trouble. We help you with your taxes. So that means we file your tax return at the end of the year for your business, and we'll help you with your estimated taxes as well on a quarterly basis. We set up your business. So if you are not set up as a legal entity or as an S Corp, we will complete all of that setup for you. And we do your monthly bookkeeping. This includes catching up on your bookkeeping, a cleanup when you join, and doing your monthly bookkeeping going forward, so that anytime that you would like, maybe you have an investor, maybe you have another reason that you need to access your financial reports, you will have up to the prior month financial reports for your business that you can pull at any time. And we'll help you set up payroll. This is S Corp specific, but we do help you run payroll for your S Corp. We'll set that up with our payroll provider, help you calculate that reasonable compensation that you should pay. And Gusto helps file all of these reports. We also do all of your registration with the state for your payroll, which can be tricky. And then we will have ongoing financial education that we provide to you on a constant basis, and it can help you with things like retirement and benefit planning as well. All right, we're going to break for a second to do a quick poll. We'll break from me talking. So Sarah's going to run this poll. You should have seen it pop up. And the question is, what stresses you out most about taxes? I'm excited to see your guys' responses. If I were to guess, I'm going to say financial advice, but I'm excited to see what you guys say. I'll give you guys a little more time to vote. All of it. Yep, I get that too. All right. I can't see. Oh, wait. Okay, here's the answers. All right, so it's actually preparation and filing. Okay, well, we can definitely help you out with that. So that was at 30%. So let's go through and see how we can help you out with that. Okay, we're going to talk about some basics of taxes. Taxes can be very confusing if it's not the world you live in. It's still confusing to me sometimes, and I live in this world. So let's talk about it as basic as we can. And if you do join Collective, we go over this multiple times so you can understand it a little bit better and know where your taxes are going. For self-employed people, there's two types of taxes that you'll pay. The first is income tax. Everybody pays income tax to the government. And this is what you usually think of when you hear the word taxes. You pay income tax when you file your individual tax return each year. And that tax can range anywhere between 0 and 37%. I know that the tax brackets just changed yesterday for 2025, but we're still talking about 2024. So between 0 and 37% of your income based on what bracket you land in, you pay into income taxes. Most of our members fall between 20 and 37%. But there's also a second tax that is imposed on self-employed individuals, and this is called a self-employment tax. And that is a tax that is a flat rate of 15.3% that is imposed on any business profits. So that 15.3% is broken up into Social Security and Medicare. Usually you don't see this when you're an employee of it as a W-2. You might recognize it on your W-2 that you get at the end of the year or on your pay stub as FICA tax paid. But when you are an employee, you're paying half of this tax. I need to go forward. Half of this tax by the employee, 7%, and the other half is paid by your employer. But when you are self-employed, you are now the employer and the employee, so you are responsible for the full 15.3% of this tax. And that's why it seems like self-employed taxes are so expensive. If off of your income, there's 15K that is owed in Social Security and Medicare, as a self-employed person, you pay all of that. Whereas if you're an employee, you would pay half. That would be deducted from your gross wages, and then your employer would pay half as well. So who pays these self-employment taxes? Self-employment taxes are paid by businesses that are set up as a sole proprietor or an LLC. A sole proprietor is someone that just started a business. They're operating as off their social. They haven't set up any legal business structure. And an LLC is someone that very similar, but they registered with the state as an LLC to give themselves that limited liability protection, which I always recommend as well to do that. But for tax purposes, they are taxed the same. An LLC is taxed like a sole proprietor. And when we look at their accounting or their income and expenses, they would have a total, or how they get taxed, I guess is what I should say. They would get their total revenue. So this is all the income that you get paid for by your clients, by any sales of product that you have, and all of this money that gets deposited into your checking account is your total gross revenue. This gets offset by any tax deductions or qualifying business expenses to reduce this total and give you a net income. If that net income is positive, then you have a business profit. If that net income is negative, then you would have a business loss or a net loss. If you this profit or loss as an LLC or a sole prop, all of your business activity gets reported on your individual tax return. So this flows through to your tax return as income to yourself as an individual. And off of those business profits, you are subject to 15.3% self-employment tax of your total business profits. And then the rest of the business profit, or also that business profits, plus all your other income. So if you have other W-2 income for yourself personally, or if you're filing jointly and your spouse has W-2 income, you would add that together, subtract all of your personal adjustments or standard deductions or itemized deductions to get your adjusted gross income. And that is the amount that is subject to income tax at whatever tax bracket you land in based on your income. So sole proprietors and LLCs pay self-employment tax on total business profits and income tax off total income. So what is an S Corp? Now that we've laid the foundation for LLC and sole proprietor, we're going to talk about what an S Corp is. So an S Corp is a legal, S Corp is a tax election. You must start with a legal structure. So a sole proprietor cannot elect to be an S Corp. You must file the legal structure first to become an LLC with the Secretary of State. So you'll form in the state, your LLC collective will do this for you as well. This requires a formal organization process with the state. You'll want to make sure you know your state guidelines for setting up your LLC in the state. And you're required to file annual reports, letting the state know who manages this entity. So an S Corp is a tax election. So an S Corp is still an LLC as far as a legal structure goes, but it is an LLC with S Corp tax election. So for LLCs, like we talked about before, they're considered a disregarded entity by the IRS, and they're taxed as the same as a sole proprietor. But with an S Corp, you're asking the IRS, will you tax me as an S Corp? So they're not a separate legal entity or legal structure. They're merely a tax election. So the IRS decides how each business structure is taxed, like we talked about, but you can ask the IRS to tax you as an S Corp, which will save you lots of money on taxes. So when you are an S Corp, the main draw or the main advantage to be an S Corp is you are no longer subject to that self-employment tax on your business profits. We'll see a breakdown later with some numbers to kind of see how that looks visually and see how it can save you money. But that's a big chunk of taxes that you're no longer required to pay. The caveat, or what the IRS asks in return, is that an S Corp creates an employer-employee relationship between you and your entity. So now you become an employee of your business and pay yourself a reasonable compensation through payroll. The reason why is because those payroll wages, just like if you were a W-2 employee of another company, are subject to that payroll tax of 15.3%. Same thing as a self-employment tax, or just another word, FICA tax. But half the taxes are withheld from your paycheck and the other half are an expense to the S Corp. But you're only taxed at that payroll amount, not on your total business profits. And both the S Corp profits and employee wages become part of your personal income. So you'll end up paying income tax on the same amount, but you won't pay as much in self-employment tax. So we'll see a breakdown of that soon. Just to recap, taxes as a sole proprietor or LLC, you have income minus deductions to give you a net profit or loss. The profit flows through to your personal tax return. You'll pay 15.3% self-employment tax on the profits, and then you'll adjust all your other income to give you your income tax liability. But with an S Corp, let's look at this a little bit differently. So you'll have your total S Corp revenue, same thing as an LLC. It's still revenue to your business that you get into your bank account, paid for by your clients, paid for by the sales of products that you might have. But now you'll have two buckets of expenses that we're looking at. So you'll have your business expenses, just like you had before, any qualifying business expenses. And then you're also going to have your salary, which is a business expense to your S Corp. And that salary is subject to the payroll taxes, like we talked about, at 15.3%. the salary and the expenses offset your revenue to give you an S Corp profit or loss. So now salary is also an expense to your business, and this payroll tax is an expense to your business. So it will lower your income, your S Corp profit, so that you pay less on that profit. So the S Corp profit or loss, because you are still a pass-through entity, the salary, you will have a W-2 from your company at the end of the year. That will flow through to your tax return. And then also the business profits, just like we've seen before. All of this is subject to income tax on your personal tax return. So you'll take your W-2, you'll take the profits, like we've talked about before, they'll get adjusted for all your income with your itemized or standard deductions, and you will arrive at your income tax liability. So let's look at a side-by-side of two companies running the same business, just one made an S Corp tax election and one remained a sole proprietor or single member LLC. So for the sole proprietor or single member LLC, they had a profit. So this is their profit after business expenses of $160,000. Both of these businesses did. But for the sole proprietor, they were not set up as an S Corp. So they did not set a salary or a payroll for themselves to pay themselves. So that amount is zero. So that means that the entire $160,000 of their business profits is subject to that self-employment tax at 15.3%. This would mean they owe a total self-employment tax of $24,480. That profit also passes through to their personal tax return. So they were subject to income tax adjustments on the $160,000. The S Corp did set themselves up to pay themselves an owner salary at $60,000. So they paid self-employment tax, or the FICA tax, if we're talking about payroll, on just the $60,000. So their total self-employment tax was $9,180. This is a difference of $15,300 that they didn't have to pay in self-employment tax. Now their pass-through profit is $100,000 plus their wages. Total amount on the taxable income is the same for your individual tax return, but you're saving $15,300 in self-employment tax. I don't know about you, but there's a lot of things I would like to do with $15,000 besides give it to the government in taxes. So this leads to a question that I get asked a lot as an onboarding accountant and or in general is, what is a good reasonable compensation? So the IRS hasn't set a standard for reasonable compensation. They don't give you a chart that says, if this is your business and you make this much money, then this is the amount that your reasonable compensation should be. It's very much a facts and circumstances argument. It's based off of what field or service industry you're in. It's based off of your business profits and what your cash flow is to find an amount that's reasonable or keeps you in compliance. You really want to find a balance between saving money in taxes, but still being in compliance with the IRS. And Collective can help you with this. I help people decide on their reasonable compensations. Every member that I meet with, I have a training call or an onboarding call with. We go over their reasonable compensation to make sure that they're comfortable with the amount that they're paying and that they feel like it'll be in compliance. And then we can help you as your business changes as well to make sure that you're in compliance going forward. But even if you don't decide to stay with Collective or choose Collective for your business, I always recommend finding a tax professional to help you with this. If you decide to go an S Corp on your own, it's good to have someone that knows the IRS standards. Even though I said there's no set calculation, they do give guidelines on what is in compliance. So it's good to have someone that is a tax professional that can help you come up with this number. So how do you know which is best for you? Should you be an LLC? Because like I said, even if you're a sole prop, it's good to get that legal liability protection. So is an LLC the best fit? It would be a good fit if for someone that's new to their business and they're not quite ramped up with earnings, you're starting out. That would be like anywhere between less than 60,000 in profit per year. So remember, profit is your amount after expenses, not your total amount from income. So if you're making less than 60,000 and you want just a simple, straightforward tax structure, an LLC is a very good option because with an S Corp, there are a little bit more requirements that you have to meet to keep in line with the IRS. But so for starting out, an LLC is a great option. But an S Corp is a good option, or maybe a better option for people that are making more than $60,000 a year in 1099 profit. So this is not W-2 income plus your freelance income. This is $60,000 profit in income that is not subject to payroll tax. So you're getting paid as a 1099. We find that this is the amount that you would start to maximize those tax savings, and that collective's cost will cover itself as well. So if you want to maximize your retirement savings, an S Corp is a great option for you. And if you have enough cash flow to make those regular payroll runs, then an S Corp is a great choice for you to start saving money on taxes. Okay, so let's talk about the main topic of today, which is a retroactive S Corp election. We've laid the groundwork for how an S Corp will save you money in taxes. And so now let's see if there's a possibility that you've missed out on some taxes in prior years, and if that's an option for you to recoup that. Typically, when you file an S Corp election, you file this with a Form 2553. This is how Collective will file for you. On that Form 2553, you will put in box E the date that you're asking the IRS to consider you an S Corp and allow you to take advantage of those tax savings. As a reminder, you have to have an LLC before, sorry, let me restate that. You can only backdate your S Corp back to your LLC start date. So even if you're thinking of being an S Corp in the future, it's good to get that LLC registered, even if you're not making enough money for it yet. Because if you do decide to backdate, you can only go back to the LLC formation date. A sole proprietor would need to sign up for an LLC or register as an LLC, and then they could elect S Corp status going forward. But the IRS usually says you have 75 days from the date of your election to backdate your S Corp. But they do have what is called a late relief process. If you'd like to request S Corp status back to prior periods, you can retroactively elect back 3 years and 75 days for your S Corp. So business owners can opt for a retroactive S Corp to capture some tax benefits, like reducing your self-employment taxes. If you didn't know about an S Corp and thought in prior years that this could have been a good option for you, but nobody told you, there is a chance that you could go back and recoup some of those taxes. Obviously, this comes with pros and cons. So the pros are, yes, you could go back prior years to lower your self-employment tax if you were an LLC in those prior years. It gives you some flexibility in tax planning, and it allows you to correct any oversight of you just not knowing you could be an S Corp. However, it can be quite a time-consuming and tedious process to do that. So if you've already filed your tax returns for prior years, you would have to go back, amend those tax returns if you are granted retroactive S Corp election. A lot of times it's hard to find a tax professional that's willing to go back and do this because it is a lot of work. You'll have to go back through all of your bookkeeping, make sure it's accurate, adjust for any payrolls that you might have missed. And there's a lot of tax filing obligations that come with doing that. It can be quite costly to try and find someone willing to go through all that work to do it. Not saying you shouldn't, but it's not always the best option for going back. It's kind of a cost benefit analysis, whether paying someone to do that is saving you enough in taxes. Definitely could be a good option. That's why it's there. But it's good to weigh the pros and cons before you go through the whole process. What would make you eligible for an S Corp tax selection? So this would be if you intended for your S Corp tax status, you'd have to intend that on the box E or line E of your Form 2553. So this tells the IRS, I want to be taxed as an S Corp as of this day. If you missed your S Corp tax status due to late Form 2553 filing, this could be a case as well. But you also need to make sure that when you file this late filing, you need to give a reasonable cause to the IRS. They need to know, why did you miss this filing? They're not always the easiest to get to to make a decision. And so it's good to have a well laid out plan of why did you miss this, so that they can make a decision quickly. And what do you intend to do to fix this quickly? And again, the Form 2553 needs to be filed within 3 years and 75 days from the date in line E. And then how do you make this? So you'll determine your eligibility and intent, and then you'll file the election form following the late relief process. So there's a link here. I think we send this out after the call, or we can send it with the recording if you'd like, or reach out to one of our new business advisors and we can help you find the education on that as well. And then you'll want to ensure that you're following consistent reporting for the entity and its shareholders going forward. What is Collective's policy on retroactive S Corps? So we will not do a retroactive S Corp back 3 years. It doesn't always seem to be worth the juice for us to do that. So if you'd like to do that, you would need to consult a different tax professional. However, we can retroactive or like backdate your S Corp election is probably a better word to say. I'm going to start saying that. Backdate your S Corp election back to July 1st if you sign up before October 31st. This would mean you need an existing LLC and you can backdate to July 1st. If you don't have an existing LLC, that's okay. We can just file that for you and start your S Corp as the date of your LLC. But if you'd like to backdate your S Corp back to July 1st, we can do that for you if you sign up before October 31st. That way you can get those few months back to July. You could reduce your tax bill by thousands of dollars. And then going forward, you're already set up with the S Corp structure. You're going to continue to save thousands of dollars on your taxes going forward. So please consult with one of our new business advisors if you're curious about this. We do have just a week left to get this in. And how do we make S Corps easy compared to other tax professionals? Well, let's give a little reminder of all of these bubbles. Without Collective, they're all kind of floating in space. You might wonder, how do I set up my S Corp? I need an EIN. I need to do that 2553 form that this girl keeps talking about. I need to decide on what payroll system to use. There's a lot of options out there for payroll softwares or bookkeeping softwares, and it's hard to know which one is going to be best for you. Calculating that reasonable compensation can be tricky. And so you want someone in your corner that can help make sure you're making a good choice. Doing that bookkeeping every month, going through, categorizing transactions, reconciling your account can be a homework item that you don't want to do as a business owner, but it's important to have every month. You might wonder, where do I go for financial questions or state compliance? How do I know I'm in compliance? Every state has different compliance rules, and it's hard to keep on top of them, even if you live in that state. But Collective does help all 50 states, so we stay on top of that. And then taxes. S Corps are required to file a separate tax return each year. So before you file your individual tax return, an S Corp is required to file a business tax return. It's more of a statement of information. There's no income tax levied at that time, but you are required to file that before you can file your individual tax return, and not everybody knows that. And then how do I estimate estimated tax calculations so I'm not subject to any penalties for missing these? And where do I pay them? And then there's this weird thing called the accountable plan that is specific to S Corps. It's a way to pay yourself from the business for your home office, but it has separate requirements for how it has to be done. And it's different than when you're an LLC. So Collective can help you make sure that you're submitting this and filing this correctly. So again, with Collective, everything is organized. You have a team of experts. So once you join, you'll have your S Corp set up. We have a bookkeeping software that we use, and we do all of your bookkeeping for you on a monthly basis. We partner with Gusto to run your payroll. We'll do your S Corp tax return. We'll explain to you this weird accountable plan thing and keep you accountable to it. And we'll give you ongoing financial education and state compliance. But who do we work with? So we work with S Corps, and most of our S Corp members are solopreneurs making $60,000 in profit in their 1099s with minimal W-2 income. This looks like sole proprietors that want to transition to an S Corp. maybe an LLC already filing as an S Corp, but you want to now come over to Collective for us to handle your S Corp going forward. Single member LLCs or anyone with self-employed profits of over $60,000 or more would be a great fit for a Collective. We can't work with everybody because we want to stay on top of the rules for this specific demographic of people that we're really passionate about empowering and helping with their bookkeeping. So this is the perfect fit for Collective if you meet these requirements. And then when you're with Collective, what does it look like? So we talked before, there's one login to run your business. So Collective is an all-in-one financial platform, or in the back-end financial platform. So to begin with, when you first join, we will set up your business entity. So that's either electing your legal LLC limited liability protection plus your S Corp formation, whichever one you need, or both. So that means we'll form your LLC if you don't have one, and then we'll file your S Corp election, obtain your EIN, and then all of those forms that come with starting a business, your operating agreement, we will create those for you so that anytime you need that, you can access that in your Collective dashboard through your documents portal. And then after all of that's formed, you'll work with someone like me, an onboarding accountant. We will do a cleanup of your bookkeeping back to your S Corp day so that going forward, you can be enrolled in monthly bookkeeping. You might not know that there are some S Corp specific accounting rules that go into play with having an S Corp. And so we'll help you be aware of them and complete them for you each month. That accountable plan is there again. So that's your home office reimbursement or mileage reimbursement. And then we'll provide you with monthly financial reports as well so that you can access those at any time. And all of that is in your Collective dashboard. All right. And also, again, payroll. I mentioned before, we partner with Gusto to set up your payroll. We'll create a Gusto account. All of these softwares that I mentioned, all of these are included in your Collective membership at no additional cost. And we'll go over the cost in a minute, but we'll help you run payroll. We'll help you in our payroll system. You can also pay contractors and file your 1099s. Gusto manages all of your payroll tax filing, so you never have to worry if you're missing a tax filing or have a late filing. Gusto does all of that for you. Collective also, it's not on here, but we do all of your employer registration with the state. So we'll make sure that you're set up as an employer with the state, get all of your company withholding numbers and enter them into the system for you. And then again, we can help you with that reasonable compensation guidance to make sure that you're in compliance. And then lastly, well, not lastly, actually. Another thing, a big advantage of working with Collective is the tax side of things. So as an S Corp, we will file your federal and state S Corp tax return. These are usually due in March. Like I said, they're a statement of information. They will report your business earnings and distributions. And then that flows, they'll take the information in there to file your individual tax return and calculate your income tax liability. Collective also sometimes has personal tax returns. So talk with one of our new business advisors to see if that's something that you would qualify for. And then we'll help you with your quarterly tax estimates. Each quarter we'll send you automated estimates of what your quarterly tax estimates should be and how to pay them. And so that you don't run into any penalties with the IRS for missing quarterly tax estimates. And then lastly, outside of these action items that are included in your membership, we'll help you keep up to date with compliance. And we also provide support. So you get annual compliance reminders, or anytime another update is sent out, we will make sure that all of our members stay informed. And then you'll have a support team that you can message anytime. You have a person that is guiding you through each step of the journey. So when you do your formation, or your business entity setup, you will have an expert there. You'll have an expert on the bookkeeping and payroll setup. And then you'll have a long-term team. This consists of an account manager. All of our account managers are CPAs and EAs, so they can help you with any tax related questions. And then they have assistants that can help with anything that is not quite as tax specific. And then we have payroll experts. You'll have a dedicated bookkeeper. all of these people work together to really keep you in compliance and make sure nothing is missed. So for existing LLCs, again, Collective can backdate your S Corp to July 1st if you sign up by October 31st. So schedule a call with our new business advisors. They're ready and they're eager to chat with you. I'm not sure if we'll be able to backdate after the 31st. So please make sure to, there's some urgency there if you want to save money with your S Corp election. But what does Collective cost? That's a good question. We're pretty transparent with how much we cost. It's not a surprise after you talk with our new business advisors. Collective costs $349 a month or $296 when you pay annually upfront. This is a fraction of a price if you were to pay a CPA firm, because you can reach out to us at any time, ask us any questions. I actually tell people, please ask us all your questions, because that way we can better serve you. But we don't charge you an additional fee every time you hop on a call with your member relationship advisor or ask us a question via email. It's a flat $349 a month for the monthly bookkeeping, monthly payroll, full-time support. There is a one-time onboarding fee of $199. That is for that business formation setup that we talked about. That can be quite a lot of work, plus the bookkeeping cleanup. I've seen companies charge a lot more than that just for a cleanup of bookkeeping. So we really try to stay competitive, because another advantage is Collective is tax deductible. So all of these costs, we want to make sure that you're getting value in the services we provide, and that they're going to pay for themselves within months with the tax savings that you'll have as an S Corp. Okay, so you can schedule a call with our tax advisor. Make sure that you use the code on the screen, and we'll send this out in an email as well. But this will save you 50% on your first month of Collective. But that is all for me today. So I will go to the Q&A. Let me check the chat too. Yep. So Sarah dropped that in the chat, the code. All right. Pull up the Q&A. All right, my Zoom bar is in the way. Let me move this around. Okay. All right. Stella says, can I backdate a company I've had for 15 years? My accountant says the IRS doesn't like that. All right. This question was asked early on, so I'm assuming, hopefully I answered this for you, Stella, but I'll say it again. The S Corp late backdating relief only goes back 3 years. And yes, the IRS doesn't always like this. Even if you go back the full 3 years, you're going to want to have substantiating evidence as to why you are doing this. We have the chat open at the same time, just in case. The price includes LLC filing personal taxes. Okay. The price includes your LLC S Corp filing and your business tax return. There is a chance that you could also have us do your personal taxes, but you'll want to talk to a new business advisor as well. We use our own software, accounting software. So it's different than QuickBooks, but it's the software that we use. So we wouldn't take over another accounting software you already have. The advantage is we build you a fresh set of books. So we'll take your raw bank data and create a fresh set of new business books for your business. All right. There is going to be a recording, so Sarah will send that out after. Slightly unrelated. Can I make myself an employee of my LLC S Corp? This is also asked early on, but you can make yourself an employee of your LLC with S Corp tax selection, and it would save you money, as we highlighted before. Do the slides we can save? I'm not sure, Sarah. Maybe you can let me know. I don't know if we send out the slides as well or just the recording. Heather is a bookkeeper and looking to guide clients with S Corp filing. Does Collective have a partnership program? I think we do have some sort of partnership programs and some in the works. I can't speak to it in specifics, but please reach out to one of our new business advisors and see if we can create a partnership. That would be awesome. I'm happy to see that you're doing bookkeeping as well for S Corps. Just the recording is sent. Okay. All right, make sure you're putting your questions in the Q&A so that I can get to them as I get through. Are there any negative implications for filing as an S Corp versus sole proprietor in regards to how much pre-tax money you can put in a solo 401k? Okay. I am not a 401k expert. I do know that it is tricky and there are maximum contributions you can make, but that's something that I would reach out to one of our new business advisors about. I don't want to tell you, or just a tax professional in general. I don't want to give you the wrong advice on your 401k. Payroll setup, we will help you with payroll setup. Sam, self-employment tax on profit or revenue. Profit. So you're never taxed on all of your gross revenue. It's always you make an adjustment for any business expenses that you have, and you're assessed self-employment tax on the profit of your business. I have a question. I don't have a Social Security. I have an ITIN. Would that prevent me? I do think Alma, you'd want to reach out to one of our new business advisors. I think that there are some specifics with your residency status that we could help you with. I don't work on the formation side of things, so I can't answer that specifically, but I know we have experts that can help you with that question. Helen, should the salary need to be regularly? If I'm a consultant, can it be? So this is a good question that I get a lot. A lot of our members have fluctuating cash flow, and so sometimes it's hard to come up with that reasonable salary number. We just want to look at your total net income that you expect for the year and make an estimation based on that, what your salary should be. We want salary to kind of be a fixed amount that you can pay yourself. So we'd look at this together as we build your books, but it's usually just like you say, I'm going to pay myself $40,000 this year, and you'll set that up. It's not the only way that you pay yourself from the business. That remaining profit, you can still take you can still take distributions as needed. You're just going to pay yourself a small portion of that profit to be in compliance with the IRS. It's in no way an expectation that you'll live off of that salary amount that you set up. I previously thought 15.3% self-employment tax was applicable up to, I'm not sure on that one. Anonymous attendee. Reach out to one of us. I can try to find the answer to that because that's a good question, but I think that the 15.3% is applicable here. As a sole prop, we need to file one tax return, however, as LCS. Yeah, so as a sole prop, you will file all of your information on Schedule C of your individual tax return. So it's all included in your personal tax return that you file in April. An S Corp is required to file a separate tax return for their business. It's, again, you don't owe any tax off of that S Corp filing. It's because it all flows through to your income tax return. It's more of a statement of information. So you'll need to file that first. Collective will file that for you. And then you take the information from there to your personal tax return. All right, Anonymous has asked me a lot of good questions. If you need the election, what is the time limit of this? Okay, we went over this, I think, after this question was asked, but happy to always say it again. So usually within 75 days, or because of the late tax relief, we can go back up to 3 years and 75 days based on Collective's policy currently, so that we can help the most people. We will go back to July if you sign up before October 31st. But you might be able to have another tax professional retro or backdate that further. You just have to pay them whatever their fee is. If you have a startup with an LLC with a partner, but your revenue fluctuates a lot during the year, can we still choose an S Corp with a low payroll? S Corps and partnerships are a little bit different. There's a different tax structure that goes with partnerships versus single. We're talking mainly here in this call about single member LLCs and S Corps. We don't help with partnerships, so I'm not as much of an expert in how the partnership tax works. So you'll want to ask a tax professional about that. To be clear, for an example, LLC created, Daryl, make sure to put it in the Q&A, but I did see your question. LLC created in July cannot be elected. Correct. So if your LLC was created in July, you can only go back to July. If you were a sole proprietor, you have to only go back to your LLC formation date. So salary is required for an S Corp. You're not required to pay salary as an LLC. it's only for S Corps. Can we elect the election for 2025? Yeah, you can elect the S Corp election for a future date. It doesn't need to be back to the LLC start date. I have an LLC and are in partnership. My partners have W-2 jobs. I'm self-employed. Again, the partnership question, I am not sure on. I think that there's a different tax structure for partnerships and S Corps. All right, I always get confused. What exactly is a retrograde S election in easier words? Yes. So a retro or a backdating S election is just asking the IRS, hey, it's October right now. I want to be treated as an S Corp back to July so that for all of my profits from July to the end of the year or going forward, they will not be subject to the self-employment tax. Hopefully that was easier words. Taxes, it's harder to always make it easier. Is collective monthly or annual commitment? It's up to you. We do have monthly subscriptions available, or you can pay upfront for the year so that you can save some money. You can cancel at any time, but just know when you cancel, you might not get the benefits of if you cancel now, we obviously wouldn't do your tax return in the next year. Does collective work with my existing bank account? I hope so. So we do our accounting software. I saw a question before. Accounting software is not QuickBooks. It is our own in-house accounting software that we've built, and it connects with Plaid. So if your bank account does connect with Plaid, then it should connect with our system, and most do. It's very rare that we have ones that don't, but I want to also, this question leads to another good question, Chris, which is that anytime you have a business with an EIN, you want to make sure that you open a business checking with that business EIN so that you can keep your business and personal separate. You don't want to be commingling business and personal. Natalie, can you change your LLC to S Corp if you just registered your business a week ago? Yes. So again, it's not a change. You'd still be an LLC. You're just going to be an LLC that elects S Corp tax status. So it's great that you already made that LLC registration, and now you can ask the IRS to also treat you as an S Corp. Anonymous, for licensed professionals who can only be a corporation. Oh yeah, totally. Do you recommend still electing to be an S Corp if your income is not yet 60K? So collective only supports S Corps. And for an S Corp, you need to be an LLC. So if you are a PLLC, we are trying to find ways to support those individuals, but if you are a corporation, they're subject to different tax requirements. And right now we cannot support those types of individuals, but maybe in the future. But I wouldn't recommend doing the S Corp if your profits is not above 60K yet. And collective will still do all of your bookkeeping and payroll for you, but you might not see as many tax benefits. All right, trying to get through the rest of the questions before our time is up. Does collective have an invoicing feature? Collective is really working hard on our invoicing feature. It is still in beta testing, but it is soon to be announced. So if you join soon, I have a pretty good feeling that it will be ready for you shortly after you join collective. For the question above, I meant, can you change your LLC to LLC? Yes, Natalie, I think I answered that. Yes, you can. Do we need to pay unemployment taxes as an S Corp? You will pay unemployment taxes in your payroll tax that you'll see when you pay payroll. Let's see, Sarah, if you do not qualify for personal tax filings, would you suggest that we have someone do taxes for both S Corp and personal outside of collective? No. If you do not qualify for collective to do your personal tax filings, collective can still do your business tax filings. The business tax return is a lot simpler than your individual tax return. As long as we've kept your books up to date, we can do your S Corp filing and then provide you with all that information to give to your individual tax return preparation professional to file. That way it saves you paying them because you're already paying collective. You have that option. You can totally opt out of collective filing your tax return if you would like, just us to give you all of your reports so that they can do your filing, but I wouldn't recommend it if you're already paying us to do it. If you do not have an LLC, can you get the sub S or must you do an LLC? You need an LLC. Mario, should I pay myself under LLC if I'm making less than 60K? It's not always beneficial to set yourself up on payroll in that situation, but you can talk to one of our new business advisors. Some people still do, just with a disclaimer that you might not save as much in taxes that way. I received my confirmation letter from the IRS. Oh, cool. Oh, right. How do I get them to backdate? It's really hard to get, once the IRS has made a decision, it is hard to get them to backdate your S Corp back to 2024. I've seen this come through recently. We can try. You can reach out, please reach out about your individual situation to one of our new business advisors. But I don't think a collective would specifically help with this. You need to reach out to the IRS and ask them if they can retro or backdate your S Corp election. But it's great news that you got it approved for 2025 and you can use that going forward. Okay, Pink in the City wants to be an affiliate. We definitely take referrals. So please reach out to one of our new business advisors. If you're doing bookkeeping for my business, can I also receive a P&L balance sheet monthly? Of course. So you'll receive all of your financial reports. You'll receive a profit and loss or income statement, balance sheet, statement of cash flows, general ledger monthly. And you have the option to talk about them with your member relationship advisor at any time. So Gusto is included in your collective monthly fee. It's $349 flat fee for everything that we include. You're not charged for any collective pays for your Gusto membership. If you do decide to leave collective, then we transfer that over to you. Giovanna, do you guys work with companies about to start in the next? Yes, it's always a good idea. I love to see when people are proactive and they're setting up their business long before they join collective. That way you have all of this back office stuff taken care of and you can just focus on building your business and not trying to do them both at once. So please reach out to us. We'd love to help get you started. Business advisor links, they are that QR code that you can see on my screen right now. You can just scan that with your phone and schedule a call. It'll also be sent out in an email after. Does collective specialize in transportation industry? It depends on how many vehicles you have. So reach out to one of our new business advisors so that we can make sure that it would be in scope. And then Sarah also dropped a link to schedule in the chat. Okay. Hey, Sarah, do I go over am I able to go over if I'm still answering questions or do we end the hour? What if I don't take a withdrawal salary and use the profit as investment for the next year? Do I have to pay income tax? So you are subject to income tax on your business profits, regardless of whether you use them personally or you leave them in your bank account. All of that is income to you that you could use eventually. Okay, go 15 minutes over. Cool. So all of that is income that you could use individually. It all passes through to your personal tax return. So you are still going to pay income tax, even if you use it or you don't. Two-part question. What is the chronological order in terms of, I think, the filing part and when I joined? Yes, this recording will be emailed. Sorry, I'm not as confused. I'm not as sure on what this means. If you want to say it again, but I'll try to answer it. So when you join collective, we'll assess what your business is at the time. So if it's an S Corp, we'll file your LLC. If you're already an LLC, we'll make sure that it's set up correctly with the state and file anything additional that we need. And then we'll elect your S Corp tax status and make sure your business is set up. We do a lot of checking and verification to make sure your business is in good standing and that it's good going forward. And then we'll get to all the fun bookkeeping and payroll and tax stuff. And is any time frame to change? Yes. So you can, within the same calendar year, you can always ask the IRS to tax you as an S Corp for a previous period. If you've already filed your prior year's tax return, I don't recommend always retroactively making an S Corp election unless you have good cause. But you can ask the IRS at any time to have you be an S Corp. if you already have an LLC. William, if you elect S Corp and things change in the future, can you go back to original status? Yes, you just need to file a S Corp revocation notice and send it to the IRS that you would like to go back to an LLC, or you can file a final S Corp tax return. But that would be like closing up shop for your business. So if you just want to go back to an LLC, you just file an S Corp revocation, which we should have some education coming up soon about. Can you take advantage of paid family leave in New York? So this is something I want to say yes, but it is like industry specific and specific to your business. So we can help you with that if you do, but you are paying into payroll taxes. It's not necessarily something Collective helps with, but I do think it is an option for you. Jessica, if you're only backdating to July 1st, is that for the whole year of taxes for 2024 or moving forward from July 4th? Yes, it is. So everything before July 1st would be treated as LLC or Schedule C income. So everything from January through the end of June, you will report on Schedule C of your individual tax return, just as you have in the past. And then everything July moving forward would be S Corp business activity and be taxed as an S Corp. So you'd have your year split between your individual tax return and your business tax return, but you'd still be saving a lot of money on that end of year taxes. As a sole, we file one return. Yes, I think I just mentioned this a couple of times. So you would have 2 returns now that you are an S Corp. Any reason you recommend we use Backdate the S Corp that has a higher leg? Yeah, I've seen IRS not approve S Corp elections before, and there are a couple nuances to it. So if you get an S Corp election rejected, the IRS makes you wait a period of time before you can request another S Corp tax election. So sometimes it's better to go with the more likelihood of being approved route, which is the July. So, and because when you do join Collective and we backdate your S Corp, we are going to do a big book cleanup. So that takes time. We want to make sure that we can get you onboarded and cleaned up in time to do your tax return in a timely fashion. Sole prop is disregarded. Yes. So, well, a sole prop is a sole prop. An LLC is a disregarded entity, which means it has legal protection, but for tax wise, it's treated as a sole prop. But an S Corp is a tax election that's you're asked to treat differently. Okay, I think I'm at the end of my Q&A, and then I'll check the chat really quick. Sole prop pay all their tax liability at the end of the year. Yes, you can still make quarterly tax estimates as an LLC or sole prop. I would advise that so you don't have a big tax burden at the end of the year. But a lot of people wait till the end of the year to see how much they owe. Okay, I'm gonna go backwards in the chat. If there's a loss, is it necessary to take salary as an S Corp? No, you don't want to pay yourself salary if you are not profitable. It's not going to reduce your tax owing because you don't have business profit to pay tax on. Yes, I'll send you the recording. We don't have a phone app yet. We're hoping to make one soon, but we're still making some adjustments to our web product. But I've seen people log into the web product just on Safari or Chrome on their mobile device, and it works pretty well that way too. Tanya, do you need a new tax number? You will need an EIN for your business. Sometimes you need a new one. Sometimes you can keep the one you had before. Our formation team can help you decide. I answered that. We are based in the US. We have a lot of team members from all over the world that help us. It's really fun to interact with everyone. There's experts all over. But we have a good amount of, it's pretty mixed, US and offshore accounting support. What if I don't take a salary and use the profits as investments? I think I answered this in the chat. It might have been the same one. You still have to pay salary. You still have to pay income tax. We use our own bookkeeping software. I think I answered most of these. So I think we're good. Thank you everyone for joining today. It was a blast. This was my first webinar, so I hope you guys enjoyed it. And Sarah will be sending out an email soon. All right, I will see you guys later.